You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/1/22. Well, leave it to the financial wizards. They're always going to find a way for you to be able to liquidate or to make your otherwise illiquid assets liquid. You've seen it in real estate. You see it in business. Well, you're about to hear about the first, I guess you would call it a digital secured asset lending platform. It's called SALT, and it's been written up in TechCrunch Plus. One of the founders with us now, Justin English. Justin, welcome to the show. How did you get into crypto-based lending?
There was just, I do know the founders, and they just had an idea of, there was a bunch of digital assets, the price was going up, and they wanted to hold on to those assets and let them grow. And so there was this need to have some liquidity on those assets one way or another. And so that's kind of where the idea was born from. And SALT, was the first lender on digital assets in the space. Since then, there's been, a ton of other options, but.
Very cool.
Yeah.
So, why does somebody come to you to borrow on their assets?
Us specifically, and just with DeFi out there today, we've been around for a long time, for the longest, I guess you could say. The two, we are regulated by the SEC. We file publicly. We're as transparent as it possibly gets. And we're held to high standards, just like any other public company. And we've always kind of prided ourselves on being able to, if you're confused or you want to hear it or hear more about it or talk through it, you can always reach somebody. Here we have, there's people to actually talk to and ask questions.
So how's the actual process work? I've got 1 Bitcoin I want to borrow money on. How much can I borrow? And how do you hold the security so that I know when I pay you off, I get it back?
So the process would start, through the web portal. You would, kind of go, there's a loan calculator that you would interface with. And there's different types of rates based on different LTVs that you might want. And so there's some choice around that. And as far as holding the collateral in the background, again, we're PCAOB audited. We show our balance sheet publicly to people. And so we do have a custodial solution. We are the custodian, but we do use partners. We use Fireblocks as a digital wallet service. And we've had high standards and SOC audits and things like that for security purposes. But we've thankfully not ever lost a coin yet. We've never lost principal and loans, but yeah.
Obviously, it's in a secure node someplace. Will you loan on any cryptocurrency or?
At this point, we're pretty limited. We're going to start expanding that actually, but we're limited to the larger liquid coins to make sure that we can get out of the position if we had to. Worst case scenario.
How do you manage your risk? I mean, I don't know if you're loaning on Dogecoin or not, but that thing is huge volatility.
We actually used to loan on that. We still do carry some loans. We did divest of that just based on the volatility of it. We just wanted to focus on, we've never had a loan loss. We don't want to start. So we just wanted to make sure our systems were okay to re-expand. So we're comfortable now, and we're starting that process of adding assets to the platform.
Okay. And so as far as limiting your risk, we were talking pre-call about that, because it seems like the volatility, you're like one volatile day away from insolvency if you're not really using risk mitigation strategies here, Justin?
Yeah, so we have an execution platform that's built by some old Citadel guys. It's connected to the platform where the pricing that is monitored through the portal and through your app is executable pricing. So we are able to manage the risk in that way, where the borrower knows where their positions are at all times of the day. They get alerts through any possible channel that you can think of. And ultimately, if the borrower isn't able to manage that or make other deposits to kind of cure a margin or add to their position, we have a product called stabilization where we end up selling that volatile asset into a stable asset. So it would be like Bitcoin to USDC. And so it acts kind of as a stop loss and gives the borrower the ability to, have that, to be able to trade that value back into a volatile asset like Bitcoin or Ethereum later when the market comes down.
All right. So let me ask you a question here. So we own some Dogecoin. I know you don't do it now. And Dogecoin's just having like the worst day ever. I mean, it could go down 80% in a day. At some point, you're going to cut your losses, basically, by an involuntary conversion of that Dogecoin into a stable coin. Do I have that correct?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper-Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
That's correct. And that's kind of that's where we sit with stabilization. So we are trying to not, and we have some case studies that are out there. Losses are really more in coins. A lot of these guys want the coins. So the idea around stabilization is to be able to continue owning the same amount of coins and fight another day. So when Dogecoin is having the best day ever, you still have the same amount of coins, and then you can participate in that appreciation. Meaning, when you come down and you hit the stop loss and the market goes through that, you have more buying power. And when it stabilizes down here, you could potentially go and buy more coins when it's lower. And then when it goes back up, you can have that.
Yeah, from your mouth to God's ears. So basically, you're effectively making a crypto margin loan.
Yeah, in a sense, there's some margin components to it. It's not a pure margin where you have to keep the funds on a platform. This is a true term loan product that we're wiring you money, US dollars into an account.
Yeah. Okay, I can appreciate that. But it is based on a margin, and
that's right.
Margin has to be maintained in order for you to know that your collateral is secure. But I don't know. You must have nerves of steel. You can get some really volatile days where, before you even can notify your client of a potential margin call, this thing could have lost 50, 60, 70% in the blink of an eye.
Yeah, I mean, there's quick moves. I mean, some of these, we've seen times where, where the first alert at, say, a 70 LTV, by the time they actually get stabilized, is in a matter of, I think the shortest period of time was 28 minutes. And so it's hard for a borrower to react like that. And, there's times where we've talked them through it and tried to help them. And if they've, deposited and it was like 5 minutes late, we can we can try and make that right for them. But they have the tools. We have a technology stack and apps out there that help them manage this, and they should see it coming.
Okay, but cryptos trade 24/7.
That's right.
I had a really great night out, imbibed a little too much of whatever my drug of choice is, whether it's alcohol or whatever. And it's 3 a.m. and I get a margin call and I am dead to the world. I'm screwed.
No, and that's really where the concept of stabilization comes in, is you are stressed. If you don't have that and you're going to get liquidated, I've gotten liquidated in the past, and it is not great. And you lose the coin, you feel a huge loss. You don't lose the initial value, you lose your perception of future value. And that's really where the concept of that is. And a lot of times this happens during Thanksgiving or during Christmas or something of the nature where people aren't looking at it. And through this product, through this method of stabilization, you are safe. Worst case scenario, it comes down, the value's still there, the loan is still there. We've essentially paused time for you to react, and you can make your decision when things are calm.
Talk about the Grinch who stole Christmas, huh? Yeah, well, this is the problem with leverage. And yeah, if you got to buy a car or something, or you got a huge holding, you want to get some cash, you don't want to sell, but to bet the whole ranch on it, how do you counsel your clients as far as proper uses of this leverage?
A lot of times, the leverage implies that you're trying to buy more of it. And there's people who do. There's some people who are high net worth that don't particularly need to work. They don't have incomes, but they're worth tens of millions of dollars in Bitcoin that don't have any real credit, that can't get an actual loan from a traditional bank. And so, yeah, they come to us, and the counseling is around if they have, and we have statistics around this. And if you run, your regression models over the last 3 years, there's, if you start with an LTV of 50, where you have 100 deposited and we lend out 50, there's a decent almost 50-50 chance you're going to get stabilized on any given day, just if you randomly toss things in. It gets a lot better when you're at a 30 LTV. If you're 30 LTV, it's a 1 in 10 chance over the next 3 years that you'll ever even see that. So that's really where it comes in. And we give them incentives, through reduced interest rates to get down to those levels.
Yeah. So obviously the less leverage you have, the less chance there is of a margin call. Mm-hmm. If you're a hedge fund, hey, you only have to have 10% up, even that. I don't even know if there is a margin requirement for hedge funds.
From that perspective, we're over collateralized. So yeah, you're looking at the 10% and they're borrowing on top of that. We have over collateralization, so we're inside that.
Yeah, so it lowers your risk. Yeah. All right, rates vary according to what?
Really, there's a pretty robust futures market. That's arguable. Obviously, the SEC is arguing it around the ETFs conversation, but there's a futures curve, just like bond markets, just like any traditional market. And so a lot of it is drafted off of that.
All right. Well, this is interesting. So, Justin, we want to find out more, want to connect with you on the web. How do you do it?
Just saltlending.com.
Saltlending.com. And there's a link to that in the show notes on this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. If you have a question for Justin, you can always shoot me an email, kl@kerrylutz.com. We'll get you an answer. Justin, a very interesting concept. We'll see how it works out. Wish you the best.
Appreciate it. Thanks for the time.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.